It's the market that keeps on notching new records seemingly every day, if not every week. According to a new report from Deutsche Asset Management, get this, we are in the midst of the second longest uninterrupted bull market ever. The question, of course, is just how much longer this run can last. Stacey, Gilbert, and Matt Maley are your Trading Nation team. Matt, running out of hyperbole, I think it's the longest stretch without a 3% decline ever in this market. I mean, you could stack record upon record in any form. Is this buying will beget more buying, or do you think we are honestly nearing some kind of top anytime soon?
Well, it's very hard to distinguish, because if it goes down 4%, is that really a big deal? And I don't really worry about time, how long it's been. I mean, let's face it, a few years ago, Tom Brady was 37. They said he's probably going to be washed up soon, and he keeps on going. So I don't put that much into it. What I care about, though, is I'm a little concerned because of valuations. And they've been stretched for a while, but now we're getting not just PEs, but price to sales. You get market cap to GDP, all combined at levels that are usually followed by a period of underperformance or poor performance in the stock market for 3 to 5 years or even longer. So I just think maybe as the market continues to rally here through the end of the year, you might take a few chips off the table and focus on rotation. I mean, we've got great leadership out of the tech group. That should continue. But we're now starting to get new leadership outside of the energy stocks and the bank stocks. So instead of buying the market blindly if you think it's going higher, try to be a little bit more nimble and get into the right groups.
So you
think
you can rotate into banks would be a good idea. If you're in something else, buy more banks.
Well, it's because you see that if they can, you see as rates move higher here, and they'll go up and down, but with the 10-year yield above 2.4% and the KBE Bank ETF up near its March highs, if that breaks above those March highs, it's already had a nice rally. It's going to gain a lot more money and a lot more momentum and move a lot higher. So yes, I would say I would look into those groups as they continue to rally.
Stacey, what's Susquehanna's view on this juggernaut market?
So one of the things I would say about this stat, it's a fun stat, right? It's a great Cliff Clavin cocktail party conversation piece.
Perfect.
But I would say one of the things to think about it, and I use it a lot. I've looked at it actually going back to the Great Depression, and we're actually not quite at a record when you incorporate the 60s, where we did have longer periods of time without seeing these kind of market pullbacks. One of the things I would say is it almost feels like that old do theory. If I have a coin, fair coin, I flip it 9 times in a row, and it's tails all 9 times, I'm not due for heads. It's not any different. Something has to change with the coin for it to become more favored one way or the other. And it's the same with the market here. Something has to change. One of the key points I think we should highlight here, and Matt had touched on it as well, is I know there were comments about the market hasn't seen the same return during this period as some of these other longer periods of time. That was mentioned in the report. What's really different right now, I think, in the marketplace versus, let's go back even 5 years ago as we were starting to see this bull market is the rotational aspect. If you look at the correlation of the market, it is incredibly low. We're looking at decade lows. That means that investors are rotating in and out of different sectors. As tweets come, as headlines come, if different stories come about, there is a rotation constantly going on in the marketplace. If you're constantly rotating, how can an index that includes everything go higher? So part of the index lack of returns is because the sectors themselves are actually seeing returns. So I do agree with Matt that I think the most important thing, particularly going into next year, is finding your sectors, finding your stocks. It is no longer the bull market where you just buy the market and everything rises. You do have to be a bit more active now in knowing where you're going to actually move things, looking for where does tax reform actually benefit? What's the difference between Taylor and some other candidate coming into the Fed? That's really impactful to the market, and that will be sector specific, not market as a whole.
Okay. I'm sure, listen, things keep going up, guys. Be prepared to have this conversation again, because we've been having it for a while, and the market just will not stop. Stacey, thank you very much. Matt Maley, thank you very much. And as always, folks, thank you for tuning into Trading Nation. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.